Hey, what's going on, everybody? My name is Chris Carter, and welcome to Crypto Secret X, the place where we talk about crypto. And today, I want to talk to you about investing, um, how to invest, the process of investing. If you're new to it, understanding, and this is going to be a part one of a series that I talk about how to invest and just various ways you get into investing. Um, First, I want to share with you. Uh, the principle of investing and what investing is really about. Investing is a process in which you are buying stock at a low rate, low price, and in return, you are expecting a gain. Now, when you start talking about investing, a lot of times many people don't understand the concept of investing, or they fail to realize what investing really is or how do you do it. Um, when it comes to investing in stocks and understanding just the core principles of investing, you have to first ask yourself the question, what am I investing in? Why am I investing in this? Uh, how do I go about investing in it? Investing in something. And with so many different stocks, you ask yourself the question like, do I really know what I want to invest in? So I'm going to give you some core principles of some things I look at of how I go about making my investments and the procedure and the things I use in order to invest. First of all, before I get started, I am going to take this disclaimer, let you know I'm not a financial advisor. I'm just basically giving you some information on what I would do when as far as an investing, but you have to do your own due diligent research to find out what are the best investments for you. Okay, let's get started here. I want to load the see. Da, 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 da. Okay. We'll go ahead and talk about it with this principle. When you get into investing, you're basically um, you have a certain amount of money that you want to put in the stock market and you expect a return. Now, for me, what I do when I first started investing, I started looking at something called the Bloomberg report. Now, when I was watching the Bloomberg report, I would see all these particular announcers and different people talk about the stocks and how things and how they make investments. But the one thing, it was all taboo to me. I didn't understand what they were talking about. I had no clue what they were saying. It was just, I just heard a bunch of guys talking about numbers. I will hear them talk about the down is down this much and this is down that much, but I still had no understanding of what they were saying. I would see the numbers, the ticker numbers on the screen. I would see these little initial letters, and I had no idea what they were talking about. So I'm going to tell you about investing and what and how do you go about doing it. First of all, you need to Google the top stocks. And when you Google the top stocks, you're going to get a few different ones. You may get Amazon, you may get Google, you just may get several different stocks. Now, once I Google those stocks, then I go to this thing called Google Finance, and I'm going to put that up on my screen. Google Finance. Let's get that up so you can see what I'm talking about here. Google Finance. Uh, it's probably can be your best friend. Okay, now I'm going to see if I can share my screen with the good people out here. Let's go Google Finance, share my screen with you. Okay. As you look at Google Finance, you see you have some numbers here listed. You have several different numbers. When you look at it, you have the Dow Jones, which is 34,643. You also have, and I'm going to blow this up so you can see what I'm talking about. If you look at it here, and then you have these other numbers: Nasdaq 13 710.2 24. But then you get down, you start scrolling down at the bottom, and then you have things like just various items and topics. But if you look at Apple right here, and I'm gonna hit on Apple so you can see what I'm talking about. Let me take that off. But when I hit on Apple, you see where I have $177.97. I don't know if you see that or not. Now, when I Google that and I see $177.97, that is the actual price of what Apple is selling for one stock. Now, I would always advise people to get everything on a radar. You get a pad and a pencil and you start following various stocks. Now, if you own it, you need to look at owning the stock. So if you have an iPhone, you need to look at owning Apple. If you have Nike tennis shoes, Jordans, you need to look at owning stock in Jordan. If you have a Canon computer, you need to look at owning stock in Canon cameras. So now I look at the price and see how those prices fluctuate. It may be 177. I may follow it for about a month or so, and then I see where it goes up to like 185, and it comes down to 156. But what I start trying to do is find a baseline number of where I want to buy in. Okay. Now, the advantage of people who've been playing the stock market for a long period of time is we see stuff when it gets we've seen stuff at its highest mark. I've seen Solana, and that's a crypto, at $252. I've seen XCM when it was 18. I've seen XRP when it hit $1 something. I've seen Cardano, and I'm talking about cryptos now, when it was $3. Now everything's like 24 cents. So for me, that's a low. That is a bargain for me. But for somebody who just coming in, they may not understand that, and they may say, "Hey, I'm not buying that much," but I know what the all-time high is. Now, so what I do, you have a thing called long-term stock, and then you have short-term stock. Short-term stock is when you get in, you make a few dollars and then you get out. You've kind of been watching it. It fluctuates anywhere from between $187 and $177, which is about a $10 difference. So for every dollar I put in, I get $10 on the dollar. So, or it raises for every stock, I get $10 on the stock. So, in other words, if I put 5 stock in at 177 and it goes up 10, I made $50. You kind of get the principle. Then you have long-term stock. Long-term stock is stock that I've seen rise at a significant amount, but now it's at a significant low, which is what they call during a recession, or when the stock market crashes, or when the feds come out with all kind of bad news. That's when I buy. I buy when there's turmoil. I buy when the stock market's in red. And the long-term stock, I am waiting for stuff to hit the highs that I've seen it at. And it could go higher, but I know that's my stop point. So in other words, if I seen a stock that was 18 cents at one time, I'm going to put a lot of stock in it because it's not even a penny. And if it goes back to that 18, then I'm going to start pulling out. What happens, what I call retailer dumb money, is I'm buying it at an all-time low. It's not even a penny. I tell you about it. When I tell you about it, it's probably at 5 cents. Then and you try to do your research, then it goes up to 10 cents. Then you get what they call FOMO, fear of missing out. And you say, "Oh, it was 5 the other day. Now it's at 10. I'm just going to start buying a lot." And then you start cost dollar averaging in, and it goes from 10 to 12 cent, 2 cent. And then there's a crash, and boom, it drops back down to not even a penny. And you lose all your money because you were doing what they call fear of missing out. You were chasing the bull. We don't chase the bull. We accumulate before the bull comes so we can ride the bull, not chase him. We want to ride the bull. You got it? So that's one of the things we buy low, sell high, look for bargains, research. And in my particular office, I have Bloomberg Report here, Google Finance here, and on my other computers, news here. And then I have another one where I start buying. So now I understand why I got the three computers, because I'm trying to see news, market, um, and just what's going on, and then I make my buys. Now, my long-term stock is more of my safer stock. This is a stock I know it's going to be there for a while, and I'm waiting for it to grow. My turn stock or my quick buy stock, when I buy those stocks, it is a risky investment. It is me taking a chance. It may hit, it may not, I may lose. So now, how do you know how much money to invest? Well, here's what I do. I look at my money, and I tell people, when you're investing, however much money that you can drop out of your pocket and don't miss a beat. So in other words, if you walking down the street and you drop $10 and you wouldn't miss it, you'd be like, oh well, that's how much you need to start investing. If you're a person that if you dropped 100, you would be okay with it, then you need to start investing 100. That's a plan, because if you lose that, you don't worry about it. Just like it would be if you walking down the street and you drop $5, you wouldn't worry about it. Okay. Now, that's how you need to start investing. You need to start now, because right now we are in a recession and everything is down. So it is a great time to start buying, because there's a lot of turmoil going on. You don't want to buy when we're in the bull run. During the bull run, all of us are making our money and we're pulling out, and you're trying to go in. You understand what I'm saying? So think about it. Again, I can't get everything in. I'm just giving you an overall view of it in the first video. I'm going to get more in depth with it, that you can get a better understanding of how to invest. I'm also starting my Patreon page, where I'll go into giving you some of my secret investment strategies that you'll get a deeper understanding of it. But until then, I'm Chris Carter with Crypto Secret X. I'm out. See you later.